If you're driving someone else's truck, running their loads, and following their rules, but you're getting paid on a 1099, this video is for you. There's a growing issue in the trucking industry that's costing drivers thousands of dollars every year and giving some companies an unfair advantage. It's called driver misclassification. When companies call you an independent contractor, even though you're really working like an employee. A lot of truckers are finding themselves in this gray area. You get a 1099 instead of a W-2, which means you're responsible for all your own taxes, both the employee and the employer share of Social Security and Medicare. Companies love it because it saves them money. They don't have to pay payroll taxes, workers' comp, or unemployment insurance. But for the driver, it can mean no benefits, no protection, and a bigger tax bill come April. Here's the difference between a true owner-operator and a driver who's been misclassified. A real owner-operator owns or leases their truck, choose which loads to haul, negotiate rates, and can refuse work anytime. They're running a business. But if the company owns a truck, dispatch assigns you loads, and you're told when and where to drive, you're functioning as an employee. Even if they hand you a 1099, that doesn't automatically make you independent. So one easy question to ask yourself, can I realistically say no to a load without getting punished or losing work? If the answer is no, that's a big red flag. For company misclassifying driver can save thousands per driver each year. They avoid paying their share of taxes and benefits, and on paper their costs look lower, which helps them undercut competitors who play by the rules. But it's risky. The IRS and the Department of Labor are cracking down, and some big names have already paid huge settlements. This isn't just a theory. Companies have paid massive settlement when misclassification is proven. So for example, FedEx settled driver misclassification lawsuit in 2015 and 2016, paying a total of around $466 million across multiple states. Swift Transportation settled a class action lawsuit in 2019, paying $100 million to roughly 20,000 drivers with final court approval in 2020. Different agency uses different tests to decide if a worker is an employee or a contractor. The IRS looks at who controls the work. The Department of Labor uses what's called the economic reality test. Basically, are you truly running your own business? And states like California use the ABC test, which assume you're an employee unless the company can prove otherwise. Under that test, it's nearly impossible for a driver hauling freight for a trucking company to qualify as independent, because hauling freight is the company's core business. If you are a driver, look at your setup closely. Do you control your own schedule, negotiate your rates, and make your own business decisions? Or are you just driving what they tell you to drive? And if you're a small fleet owner, be careful. The rules are tightening and misclassification can have serious consequences. It's always cheaper to stay compliant. If you're a 1099 driver, owner-operator, or fleet owner, I've built Excel and Google Sheet templates specifically for trucking businesses. They help you track income, expenses, and profit the right way, so you can see your true costs and stay on top of your business. Don't forget to like, subscribe, and check out the link below for the templates.